The market chooses to take our path lower and hits our downside target perfectly. So is this the bottom? Find out next on Invest with Jacob. All right, guys, so the market traded down today for most of the day before hitting our downside target of 43.40 SPX before bouncing off of that and then kind of trading sideways. We bought near the lows, and now we have to ask ourselves, was that the bottom? We'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, and I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. So in yesterday's video, I talked about the market having two potential paths, one higher and one lower, and us being kind of in a limbo range where it was kind of a coin flip on which way it went. It chose the path lower, and it came down and hit our downside target of 43.40 exactly on the SPX. Again, guys, this is the power of Elliott Wave showing us our targets and where we're at. Now we have to ask ourselves, was that the bottom? And we hope it is because we bought SPY calls right there near that level because that's where we think the bottom is coming in. And as of right now in the futures, that bottom is holding. So to see how the action played out today, as well as see what we expect for tomorrow, let's jump into the charts and take a look. Okay, guys, so here we are on the ES 5-minute chart. And if you don't know, the ES is just the S&P futures. And the reason we're looking at this chart is because you get all the after hours action, and this wave 4 happened after hours. So it makes a clean trading environment for me. I can see all the pullbacks and get my measurements correctly. So if you watched the video yesterday, you know I put this C wave on the chart yesterday. And we came down and tagged it perfectly before bouncing. Now, how did I know where to put this C in order to capture that move? Okay, the first thing we need to do is get our fib retracement tool over here. We come down to the bottom of the wave, all the way to the top of the wave, which is up here. Okay, we drag that across so we can see where it measures. And you can see that that's the 50% fib. Wave 2s typically target the 50% fib pretty often. So when we decided to take the path lower, as I said we could do in yesterday's video, that's why I put the C wave here, because the target would be the 50% fib. Now, it may be that we do move lower. However, in Elliott Wave, you must trust your levels, and I trusted this level as our support zone so that we can build a structured trade with a well-defined support zone as well as a well-defined target above so that we understand how our trading plan works. Okay, now if we do move lower, if this does break down and this is a fake out breakout of this triangle and it comes back down, I believe that the bottom would actually be the next fib down, the 61.8 at 43.20 ES. It's 43.19 on the chart. I like round numbers. So 43.20, about 43.28 on the SPX. So that's our target down. If it does move lower, we should bounce there. Regardless of what the market decides to do tomorrow, there is evidence that this is a short-term pullback and not some larger correction. Now, that evidence starts with the fact that this move down is very corrective, meaning it overlaps, there's no 5-wave structures, and it's kind of sloppy. Generally, trading like that is consolidation, and it moves down till it hits the target and then bounces and starts a new rally higher. The second thing that tells me that this is likely a bottom is that the VIX is set up to fall. And when the VIX falls, the S&P generally goes up. The third thing is all three of the major indexes, the S&P, the NAS, and the RTY, bounced off their support zones and moved higher. That tells me that support is holding across the board and they are looking to move this up. So even if we do go lower, I don't think it's going to be much lower. I think, like I said, it's going to be the 43.20 level on the ES, 43.28 on SPX, and then we go higher. Now, as far as the chart goes, we do not have our first indication that the bottom is in place. That will happen when we climb over this 23.6 fib at 43.59, okay, into the 43.60s. Once we break out over that level, that gives us our first indication that a bottom may be in place. All right, after that, we're looking to go take out the new highs and go higher from there. So guys, if you like this video today and you want to hear more from me, if you want to hit targets on the number, you need to get in my Facebook group. There's a link down in the description, okay? Go down there, click that link. You'll find a link to my Slack channel, which is just a free chat channel. I'm on there all day. I give real-time market updates. I answer your questions. I give out our buy and sell alerts. I tell you exactly what we're buying and what we're selling. A lot of great guys in there, some talented traders, some people learning how to trade. We'd love to have you in there so we can make some money together. But there is one stipulation. There's one thing you have to do to get in my Facebook group. You got to subscribe to my YouTube channel. So hit that subscribe button down below. Get in my Facebook group. Come learn disciplined, profitable trading with us. We'd love to have you in there. All right, guys, so key takeaways for today. First thing we're watching is yesterday's low. If we break below that, we are likely headed to 43.20 before we bottom. The next level we're watching above is 43.60. We break above 43.60 on the ES, and we are looking higher toward our upside target. That is the video for today, guys. It's the weekend. Grab a glass of bourbon, have a drink, enjoy your weekend. I will talk to you next week.